Hi, Ed Ross here with edsforecast.com. One of the things that everyone says to me is, Ed, you were a bit nervous when you had the downturn and before you became a multimillionaire from real estate, you, you had lost a lot of money in real estate. So, what made you get back into it? Well, I tell everyone, look, I really had no choice. My choice was either to lose the properties and give them back to the bank, or try to figure out a way out of the mess and try to make something positive out of it. So what I did, I went with the path to make something positive. What I realized that I did, there was a fundamental difference between my first time investing in real estate when I was not doing well to my second time when I became a multimillionaire was planning. That's what the ingredient, the secret ingredient that I put into my methods to make sure that ultimately I could become a millionaire from real estate. And everyone says, well, that sounds great. What do you mean by plan? Everyone says I have a plan. A plan is, I want to become a millionaire and I want to buy X amount of properties and that's how I'm going to do it. And I want to find them. I want to find ones that make a lot of money for me. And this is how I'm going to do it. And that's true. That is a plan. That was kind of the planning I did on the first time I invested in real estate. That was really detrimental to me because my plan did not have security measures in it to allow me to be conservative on my estimates, on ensuring that I can meet my planned goals. Planned goals from the very beginning when I went into real estate was to become a millionaire off of real estate. I had a goal that before age 30 I would be worth $5 million. Well, I was on my way there by doing a lot of short selling, real estate investments, renovations, flip and turns, etc. And I thought that I was going to rise very quickly to that number. And then I found out that you know, factors can hit you. And those are the factors that you have to put in your plan. And the factors are real estate downturns. The factors are migrations of where people are going to live and where they're not going to live. Factors are what's going to happen with rent rates and how much are rent rates going to go up over the next few years. And how am I going to deal with my cash flow issues and make sure that I have positive cash flow continuously, because I can't afford to carry something that doesn't make money. And so all these factors came into play that were not included in my planning. My planning was I was just going to go for it. I was going to go for the gusto. And if you look at a lot of real estate seminars, they try to teach you how to have the right mental attitude. Well, you know what? I realized I had the right mental attitude. That was not my problem. I had the right drive. I had the right personality, success rate, and everything else. What I didn't have is I didn't have the right plan. And the right plan has to be extremely conservative. The right plan has to make sure that I'm planning for my future and for my lifestyle so my lifestyle doesn't change. The right plan is one that works for my family regardless of what happens with the economy. The right plan is one that ensures me that I have a realistic goal that I can achieve that has very low risk involved with it. That's true business planning. True business planning is to look at a horizon, and the horizon is typically not 1 year. I was looking, quarter to quarter at the most. Maybe I would look 1 year out when I was first investing. But a true plan, and you can learn a little bit from the Japanese and the Chinese and what they're doing, is 3 to 5 years. As an American, I don't like that. I want my Big Mac, my fries, and my supersize immediately, and I want my reward immediately. But I realized through education that and educating myself that the only way I was going to do this is by giving myself a 5-year horizon plan. So I put every conservative component, every issue that could make me fail during the 5 years, everything that could be done wrong, what could hurt me from a cash flow standpoint, and I built a plan customized for myself to get out of the mess that I was in. And quite frankly, at the end of 5 years, I all of a sudden was driving home from my daytime job, a regular job, and I had this emotional turning point in my life, and I started having tears in my eyes, and I realized I make more money every week in real estate than I do from my weekly paycheck at my job. And I never thought of that because I had that plan in the background, and I saw that it was doing well, my investment was doing well. I never really could even look at it because I was so scared that when I did my planning that I probably didn't do it correctly and I wasn't conservative enough and I was going to get hit in the face again and I was going to have a downturn like I originally did when I was investing. And I realized that I had so much built into my plan that it couldn't fail. And that was when I was driving home that day and I said, I don't need to work another day in my life. I am a wealthy individual. I make more in real estate than I do in my daytime job. It was just an amazing time in my life. And quite frankly, I never really quit my job because I liked working, and I realized that real estate was money I was making while I sleep. So I mean, I did at one point leave the marketplace for a little while, but I realized how difficult that was for me. But in your case, you may want to stay home and golf and play. The goal is that if you have a very good, solid plan, a plan that's built taking in all the risk factors, a plan that works for you, not a plan that works for me, not a plan that works for Ed Ross, not a plan that works for some other individual, but a plan that actually for real estate investing works for you, works for your circumstances, because maybe you do work a full-time job or you're working 60 hours a week. You set up a plan for your goal. The goal should be a minimum of $1 million, because I like everybody to be a millionaire from real estate to make it worthwhile. But if your goal is 500,000, that's fine. But I usually always target $1 million. My target was 5 million, and in that 5 years, I hit that $5 million number. So the reality is that it's very doable, and you don't have to interrupt your life, and you can maybe have that day where you're driving home and realizing you've arrived, just because it hits you, and for some strange reason you just realize, wow, I don't need to work anymore. So that's what planning does for you. That's what planning does to make a unique plan for you. That is something that I encourage everyone to do in real estate investing. You have to know how to do it. It's not an easy task, because it is a financial plan. It's a business financial plan that you do, along with the tools that you have to buy. But it is something that you can do. It does work. It has happened for multiple people that have worked with me again and again and again. And it's something that all you have to do is know how to do it, and it's a great tool to bring you to success. Thank you.